Hey all, my name is Paul Borosky, and I am the owner of Quality Business Plan, as well as the author of The Beginner's Guide to Understanding Financial Statements and Financial Ratios, which is published on Amazon.com, as well as Tesla 2021 Financial Report, which I publish on my website. All right, so with that said, for this video, what I like to do is do a quick analysis, focus on Tesla's current ratio and quick ratio. And so the way the video is going to work out is I'm going to go ahead and first give you a little bit of information about who I am, what I do, and why I do it. From that point, we're then going to delve into Tesla's current ratio and quick ratio for the last 5 years. And once we're done with that, we'll sum it up, wrap it up, and call it a day. All right, so as promised, a little bit about me. I am, like I said, the author of Tesla's Financial Report by myself, Paul Borosky, MBA. If y'all do want a copy of that report, I will provide a website link at the end of the video, as well as I am an adjunct professor and subject matter expert for business as well as finance. So I write finance books, design college courses for finance, and do financial models. I like my numbers, so I like finance. All right, so with that said, let's talk about finance, specifically Tesla and their current ratio and quick ratio. So for the current ratio, the way the calculation works, which is also in my financial report, is it's simply the current assets divided by the current liabilities. And if the current assets are more than the current liabilities, then we're going to have a current ratio of 1.00 or above. If the current liabilities outweigh the current assets, for example, 2017, $7.6 billion current liabilities, $6.5 billion current assets, we're going to have a current ratio of below 1.0. For the gold standard in finance, current ratio 1.0 does mean that the organization should be solvent for the short term. With that foundation set, 2017, Tesla's current ratio was 0.86. Now, that is, in my opinion, well below the threshold of the 1.0, which means that the company was probably struggling a little bit with cash. In 2018, it seemed to have gotten even worse. Their current ratio is now down to 0.83. When that starts to happen, then hopefully the executive team is going to start to stress, and they're going to start taking some steps to start raising some capital. In 2019, the company was able to bump up the current assets to a current ratio of 1.13. Now, like I said just a few minutes ago, the current ratio of 1.0 is a good thing. It means they have enough current assets to cover current liabilities. Once they start going well above that 1.0, that means that they're not optimally using their current assets because they've got too many current assets as compared to current liabilities. Some of those current assets could be shifted over to long-term assets, which usually generate more revenues over the long term. So in 2019, they're not too bad. They're at a 1.3 current ratio. However, in 2020, the company really drops the ball here. They kick up their current ratio to a 1.8, which means they have a significant amount of current assets as compared to current liabilities. And especially for Tesla, when their inventory is so low, that means they're holding a substantial amount of cash in or short-term investments. So the company's really mismanaging that. However, I get it. 2021, there was a little bug going around, the pandemic, and in that time, the company might want to have had an extra cash buffer to ensure that operations went smoothly. So they did that, and in 2021, hopefully it would have come back down to a 1.0 or 1.1. But the organization still had a current assets as compared to current liabilities of a 1.38, which means they still had significant amount of current assets as compared to current liabilities. And that tells me that, again, the organization is mismanaging their current assets. They're not using them in an optimal manner. Now, if we take a look at our quick ratio, which is just the current, it's the current ratio backed out of inventory. So the calculation for this is going to be your current assets subtracted your inventory divided by your current liabilities. So when that happens, we're going to be expecting all these numbers to be well below the current ratio. In 2017, the quick ratio is about a 0.5, which is still that's a little bit lower than what I'd like to see. I'd like to see it at about 0.7. 2018, it drops even lower than that. However, once we get into 2020, the quick ratio is a 1.59, which means that even if you back out the inventory, the company still had current assets enough to cover the current liabilities. So anytime that the quick ratio starts to exceed a 1.0, that tells us they're holding too much cash. I mean, their cash or short-term assets, they're too heavy in those positions. They need to divest, bring it down at least below a 1.0, preferably closer to a 0.9. And again, the organization's quick ratio is 1.59 in 2020, and in 2021 is a 1.08, which tells us that the organization is just holding too much cash, too much short-term investments. They need to move some of those funds either, into inventory, because there are some shipping delays right now that it wouldn't hurt them to build up their inventory position. That's a worst case scenario. A better strategy would be to divest some of that cash into long-term operations. Put your money towards building more property, plant, and equipment, doing some acquisitions, whatever you can do. Just move that cash out of your short-term assets, put it to work for the organization. All right, so hopefully that information was helpful. If you'd like some more tips and tricks and thoughts and ideas on analyzing Tesla, visit my website at qualitybusinessplan.com/Tesla financial statements and financial ratios analyzed. And if you'd like a financial report on a company other than Tesla, for example, Microsoft or Apple or Amazon.com, just check out my webpage at qualitybusinessplan.com/public company financial reports. So hopefully this information was helpful. And if it was a good video, please give me a thumbs up on YouTube. And as always, have a good day. Thank you.